If we have cash, it's because we haven't found anything intelligent to do with it that day in the way of buying into the kind of businesses we like. And when we can't find anything for a while, the cash piles up. But that's not through choice. That's because we're failing at what we essentially are trying to do, which is to find things to buy. And we make no attempt to guess whether cash is going to be worth more 3 months from now or 6 months from now or a year from now. So it is, you will never see, we don't have any meetings of any kind anyway at Berkshire, but we would never have an asset allocation meeting. We would keep looking. I mean, Charlie's looking, I'm looking, some of our managers are looking. We're looking for things to buy that meet our tests. And if we showed no cash or short-term securities at year-end, we would love it, because it would mean that we'd found ways to employ the money in ways that we like. I think I would have to admit that if we have a lot of money around, we are a little dumber than usual. I mean, it tends to make you careless. And I would say that the best purchases are usually made when you have to sell something to raise the money to get them, because it just raises the bar a little bit that you jump over in the mental decisions. But we have, I don't know what we'll show, but certainly well over $1 billion of cash around, and that's not through choice. That is that you can look at that as an index of failure on the part of your management. And we will be happy when we can buy businesses or small pieces of businesses that use up that money.
Companies should either put the cash to good use or distribute it to shareholders. Can I get your thoughts on this?
Well, there are times when we're awash in cash, and there have been plenty of times when we didn't have enough cash. We obviously are looking every day for ways to deploy cash, and we would never have cash around just to have cash. I mean, we would never think that we should have a cash position of X percent. And frankly, I think these asset allocation things that tacticians in Wall Street put out, about 60% stocks and 30%, we think that's total nonsense. So we want to have all our money working in decent businesses, but sometimes we can't find them, or sometimes cash comes in unexpectedly, or sometimes we sell something, and we have more cash around than we would like. And more cash around than we would like means that we have 10 or 15 cents around, because we want money employed, but we'll never employ it, just employ it. And in recent years, we've tended to be cash heavy, but not because we wanted cash per se. In the mid-70s, we were scraping around for every dime we could find to buy things. We don't like lots of leverage, and we never will. We'll never borrow lots of money at Berkshire. It's just not our style. But you will find us quite unhappy over time if cash just keeps building up. We have $16 billion of cash, not because we want $16 billion of cash, or because we expect interest rates to go up, or because we expect equities to go down. We have $16 billion of cash because we don't see anything that makes us want to part with that cash where we feel we're getting enough for our money. But we would spend it Monday morning on the right sort of business, or even if we could find equities that we liked, or if we could find, like last year, we found some junk bonds we liked. We're not finding them this year at all because prices have changed dramatically. So we're not really ever positioning ourselves. We're simply trying to do the smartest thing we can every day when we come to the office. And if there's nothing smart to do, cash is the default option. We don't like having excess cash around. We like even less doing dumb deals, because we do them forever. I mean, if we make a dumb deal, it just sits there. We don't resell it 3 months later by having an IPO of it or something of the sort. So you're right to say that we should be very uncomfortable about the fact that we've got the cash, but it's also important that we not be so uncomfortable that we go out and do something just to be doing something. But the goal of that cash is to be translated into permanent earning power over time, like I say, with the $4 billion that we've just committed on this car. We love having that $4 billion employed there instead of sitting around in short-term securities. And that's our job. Charlie and I don't do anything else except appear in movies and that sort of thing. But you're right to keep jabbing us on that because, but we jab ourselves. Neither one of us is basically likes cash. We always want to have adequate cash, and we always will have adequate cash. And we are the biggest player in the world in cat insurance. And people come to us because they know we're going to run a place that's very strong financially. But it doesn't have to be as liquid as we are now.
The last thing we like to do is own something at 100 times earnings where the earnings can't grow. I mean, as you point out, we've got almost $100 billion. It's a $90+ billion invested in a business, we'll call it a business, where we're paying almost 100 times earnings, and it's kind of a lousy business.
It's more after tax earnings.
Yeah, so we don't like that, and we shouldn't use your money that way for a long period of time. And then the question is, are we going to be able to deploy it? And I would say that history is on our side, but it'd be more fun if the phone would ring instead of just relying on history books. I am sure that sometime in the next 10 years, and it could be next week or it could be 9 years from now, there will be markets in which we can do intelligent things on a big scale. But it would be no fun if that happens to be 9 years off, and I don't think it will be, but just based on how humans behave and how governments behave and how the world behaves. But like I say, at a point, the burden of proof really shifts to us big time. And there's no way I can come back here 3 years from now and tell you that we hold $150 billion or so in cash or more, and we think we're doing something brilliant by doing it.
We would like to have no cash at all times. We also don't want to owe a lot of money at any time. But if we have cash around, it's simply because we haven't found anything we like to do, and we always hope to deploy it as soon as possible. We never are thinking about whether the market's going to go down or something of the sort, or whether we might buy something even cheaper. If we like something, we'll buy it. And when you see cash on our balance sheet of any size, that's an acknowledgment by Charlie and me that we have not found anything in size anyway attractive at that point. It's never a policy of ours to hold a lot of cash.